Joining us on set to discuss, D.A. Davidson analyst Michael Baker is with us. Thanks for coming in. It's good to see you. Bob's point on inventory, how important is that?
Well, I think that's one of the biggest issues that we're seeing in the fourth quarter. And to me, what's going to happen is in 2023, that's going to look a little bit better. Retailers took a lot of pain in 2022. They identified the issue early, and they marked it all down. Pain point in 2022, but I think it's going to be a benefit in 2023.
Of today's two big prints, which is the better inventory picture?
Oh, Walmart. Walmart's inventories were essentially flat. They're up 25% mid-year. Aggressively marked it down, took the medicine this year. I think that's going to lead to better margins next year.
Does that explain the disparate price action?
I think so, as well as Home Depot is being hurt by trends in the housing market as well. The existing home sales came out today. They missed. Price appreciation is getting squeezed. So I think there is a housing issue there. Walmart's comps were great. And I think it's pretty clear to me, at least, that the guidance appropriately conservative. Why would anyone get over their skis right now in terms of the 2023 outlook, particularly a new CFO? Remember, John David Rainey just started mid-year. So we expected a conservative guidance. We got it. Frankly, probably a little bit more conservative than we thought. But I think the market's understanding that, you want to set a low bar here.
I feel like toward the end of last year and this quarter even, it was where you were, which categories, right? Housing, no good. Groceries, good. Services, good. Goods, no good. And now you've got this added dynamic where a lot of categories are still inflationary and some are disinflationary. How does that impact overall retail margins and sales?
Yeah, well, so our outlook at margins is that they'll actually be a little bit better in 2023 in terms of the trend than they were in 2022. To me, in 2022, there were three issues that hurt margins. It was the markdowns, it was supply chain deleverage, and it was labor cost inflation. And I think two of those three are going to be better. The markdowns should be better, and the supply chain should be better. The labor is still going to be an issue, and we saw that today with Home Depot raising their labor rates. But we think margins will be a little bit better this year. As it relates to which categories you want to be in, we're tending towards categories that are a little bit more recession, I don't want to say resistant, but maybe hold up a little bit better. Auto parts, retailing, Walmart, grocery, as an example. Ulta Beauty, you and I have talked about that in the past.
Every day.
Yeah, it's been great. That does seem to be a little bit recession resistant, and generally housing has been obviously a lot weaker.
On the broader issue of inventories, are there any retailers in your coverage universe that have not been handling it well or that you're concerned about?
Well, certainly throughout the year, we've seen a lot of issues. I think most retailers have gotten their arms around it. I mean, Target was really the poster child of the issue. I guess we'll see what they say next week. But our view is that should look a lot better for them. So in general, we think the inventory issue will be a lot better in 2020.
So generally speaking, a positive for the group as a whole?
We think inventory trends, believe it or not, will be a positive in 2023 versus 2022. Coming off a very easy comparison, if you will, just a disaster in 2022. But retailers did the right thing, identified it early, marked it down aggressively, and we think most retailers are going to start 2023 relatively clean. If not at the end of the fourth quarter, then certainly maybe it lingers a little bit into the first or second quarter. But for the full year, I think inventory will be a positive story this year.
So you think maybe like back to school is we've seen peak promotion, so to speak? And inventories look good, at least on back to school?
Yeah, I would agree with that. The wild card, of course, is what happens with the consumer and consumer spending. And if all of a sudden we go into this major consumer recession, then back to school could end up being a little bit more promotional. But that's not my call right now. Retail sales have held up pretty well. We do think retail sales will slow in 2023 versus the last couple of years. 2021 was a record year for retail sales. 2022, for most of the year, also stronger. That has started to moderate. But overall, we think 2022 retail sales should hold up reasonably well. If we're wrong, though, then we'll have a much more aggressive back to school.